Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Welcome, everyone, to Digital Currents. Mark, you are dialing in from about as far away as possible on the other side of the earth. How are you, Mark?
I'm doing great. Here at the lovely Hong Kong airport, and not a prison cell. And I probably shouldn't stand up today and do the sock reveal, but I am wearing the Genesis Block socks. But I'm in a suit, so no orange pants today. You got the orange shirt, though. So
yeah, I tried to at least say, wherever we're going to be recording this from, it is Friday, so we have to represent orange. But I was so glad you were able to dial in, Mark, because there's just so much going on this week, and I couldn't have even attempted to record this alone for all of the stuff.
Yeah, you could have done. You would have done.
Here's the thing, Mark. I wonder if this made the news there, because we should even cover an episode of how news works differently on different continents that are reporting the same piece of news. So you probably saw this, or maybe you've just been in such a whirlwind, but Apple has reportedly partnered with Alibaba, obviously,
Yes.
right where you are, in China, for their AI rollout after they rejected DeepSeek. So they kind of shuttered the upstart that was driving sales, or I guess downloads on their app store, and have kind of had this native Alibaba partnership. We know that once DeepSeek came out, the timing can be a little bit murky, because you got to imagine that companies were developing this technology for a long time. And basically, Alibaba said, no, I can do that. Remember me? I'm the big company in the East. And so this is kind of a big piece of news, Mark, because as you know, China is probably the critical market for the iPhone, right? I mean, the U.S., we love it, but just by sheer population. And so we've got another release of, the iPhone SE, kind of the lower entry point into the iPhone lineup. I think it's basically like an iPhone 14 or an older version of that, but it's kind of repurposed. So kind of Tim Cook has said that by basically not having some of this native AI functionality, they contributed to 11% decline in iPhone sales. So when I see this kind of U.S.-China partnership around AI, I think about kind of a new level of complexity in chip wars. Maybe this is a truce, so to speak, but curious if this is at all made waves out over there. And if not, kind of what are some of your thoughts on, you have two of the tech giants now potentially working together?
No, absolutely. And it was absolutely reported the same here. Actually happened to meet with one of the Alibaba founders' family office today. So that was kind of fun to talk. I actually talked with them about this. So very similar perspective. I will say one thing. There's a lot of talk over the last 2 days here in Hong Kong, 1 day in Singapore, and a lot of discussion about, China-U.S. tension and tariffs. And I was giving my presentation where I thought that, I did my 10 surprises. One of the surprises was that, I think China is playing a different game, right? They have been selling U.S. bonds, which has been driving up U.S. interest rates. And so if the U.S. threatens tariffs, they're like, well, we could just tariff you back, because, our consumer market's now bigger than yours. And to your point, I think what Apple realized, well, wait a second, we really want to sell a lot of phones in China, because right now, Android dominates China. It's all about Xiaomi phones and Huawei phones, and so huge opportunity for Apple. So it is very interesting, because here people are like, there's no competition. We're friends, right? We send you stuff, we make stuff, you buy it, you come over here, and so the difference is probably just news. It was news here. Back home, it's always more propaganda-ish. But that's, I guess, the way it's supposed to work. So here, if they were reporting on something, China oriented, it might have propaganda about how it's much better than the U.S. and we do the same thing. So maybe that's normal. I can't understand the Mandarin, so I probably missed that.
But it's one of those things too, Mark, where you've been in the market a long time out in Asia and have kind of understood that, it's not just a single player to rule them all. And I think on the U.S., we tend to report on one company almost like they're state-backed technology firms, when in reality, China has a budding ecosystem for startups as well as technology companies, right? So basically, Apple rejected not only DeepSeek, but ByteDance, another player. Huawei was actually surpassing Apple, as you noted, in adopting AI. So it's one of those things too where we mentioned on our last show, almost serendipitously, collaboration creates the best tech advances as opposed to kind of walling off where I'm ahead.
100%. And look, the innovation here in Asia, and particularly in China, is off the charts. I mean, and Hong Kong's not mainland China, but still part of China now. And even here in Hong Kong, which is not really thought of historically as a tech hub, the government has put together programs where for every private equity dollar, venture capital dollar that goes in, they will match 1 to 2. So, and we went to Cyberport. There's this big, giant building. They do everything big here. Giant building full of startups with, a gym and juice bars and all things you'd expect to see in Silicon Valley, and hundreds of startups wandering around the halls. So, collaboration is absolutely better. Open source is better than closed. And I think that's been embraced here. And it's kind of funny too, because, 20 years ago, 25 years ago, it probably was true. I'm not pointing fingers at anybody. It probably was true that, there'd be Chinese students that came over to the U.S. They'd get jobs at U.S. companies, and perhaps they tucked a few things in their notebooks before they came back home. Now, those same students aren't going to the U.S. universities. They're going to the good universities here, and they're going directly into Chinese companies and innovating. So now we're kind of looking over and saying, hey, you got some good stuff that we could use. And if we thought of it as collaborators as opposed to enemies, well, I'll give you a good example. So one of the things that was reported on a lot this morning was Trump is calling for a, tripart or trilateral meeting with President Xi, President Putin, and himself to talk about a 50% reduction in defense spending.
If those walls could talk, Mark, right?
Oh my gosh. I mean, can you imagine being in the room where it happened for that one?
Oh, yeah.
And it's really pretty extraordinary when you think about it, that the people who we think of as leaders, and, the last few decades, and pretty lousy from that perspective when you look around, people's perception of leadership.
Yeah.
But I saw actually a great graphic today. And it was funny, and, the algorithm just serves it up. But so they had a picture of, Trump and Putin talking. So they're setting the stage for this tripart meeting. And, setting up a call with Xi. But then right below it, there was a chart of Putin's been in power for 24 years. Pretty impressive number, right? And it so had, whatever that was, 2001 to 2025. And it showed things like GDP and income per capita and number of jobs and a couple of things. I can't remember exactly. And the increases weren't like 10%, 20%. It was like 15 times, 17 times, 11 times. And the caption was, "This is a leader," right?
Oh,
And
so many ways you can interpret that statement. And it's funny because I was just talking with my wife the other day about the federal budget, just like a casual Saturday morning conversation. And I said, you know what would balance the budget? A reduction in military spending. And
oh my gosh,
she said that would she's like, that would never happen. I said, no. But you basically can reduce one side of the ledger, but invest in chips and in technology, which is contributing to defense spending, but through a different vehicle. And said, well, the fallout of that, and she was not wrong in kind of believing that, because that's what we are.
Oh, she definitely wasn't wrong.
Right.
Well, definitely not wrong. Ceteris paribus, right?
That's right.
All things equal, all things the same. Definitely, you should believe that. But in a world where we could get a recognition by all of the major superpowers, this is a good thing.
Yeah.
And you and I have talked about this a lot, right? That the current battlefield is no longer ships.
Exactly.
It's not a kinetic war, ground war, or ocean-borne war. It's about cyber. It's about chips. And so, and the cool thing, back to your point, you can reduce the expense and you can increase GDP. Now, the one negative, if you happen to own defense companies, that GDP will come out. And look, the deficit spending is another way that our GDP has been inflated, but also inflated the debt. And I do think it's going to be interesting to watch what happens is, Doge doing their thing and chopping and hacking. Okay, let's say they cut $2 trillion of spending. Okay, that actually is some people's jobs, and I do feel badly for real public servants who have to get retrained and find new jobs. But there's also some things that were real. Some of the money was actually getting into things that got counted as GDP, so that will have a negative impact. So it's obviously very complex, but I think it's interesting to be here, like I say, on the other side of the world, hearing the same story, but also getting a very similar reaction. Everyone we talked to the last 3 days, super positive on innovation, super positive on AI, super positive on chip technology, and there was no concern about no one ever brought up tariffs. No one ever talked about, boy, that's going to crash everything. It was maybe everyone's just numb to it. Like there's a lot of talk, and then they get to the point, oh, okay, just kidding, we're not going to do it. Who knows?
Yeah, I mean, it reminds me too, Mark, that we all fundamentally have the same needs, right? According to Maslow, right? So we all need a degree of safety. We all need a degree of shelter, and kind of moving up the charts until you got higher things like self-esteem, self-actualization, and of course, having a good economic foundation is the bedrock of that. But I think some of these tensions, when you talk to people on the ground, are very different. But I'll tell you something that is still very tense, and a war that has been beginning on Twitter and X. I'm sure you have seen this, Mark. Elon is back to his old tricks, but Sam Altman had a hilarious response, which I'm sure you saw. So for the listeners, basically Elon, in his bid to be the CEO of everything, is trying to make another bid for OpenAI, and he's contended, Mark, we reported this, about how, he got in under false pretenses that this was supposed to be, as an investor in OpenAI, it was supposed to be a nonprofit. Again, kind of interesting as a nonprofit investor, but we'll digress. And it basically went into a kind of heated contention that, well, we need to sack the leadership because it is clearly a for-profit model, but I'll be the generous benefactor here and offer $97.4 billion with a B to acquire a startup. And everybody is thinking this is sort of a bad deal. You have some people saying, well, that's $100 billion. That's not nothing. That's bigger than most companies in the world. But then, of course, Altman responds back, right, on X to Musk, and says, we are not for sale. And actually, I'll give the direct quote because it's so funny. He says, no, thank you. but we will buy Twitter for, and then he moves the decimal place, 9.74 billion if you want. And we remember Musk overpaid for Twitter for about 40 billion. So I think this is kind of showing that, the egos just keep increasing in kind of the 1% club, or I guess at that point, the point.
Well,
1% club.
Well, the egos are definitely, but I will tell you that I think there's a more sinister reason
I love it.
For the Musk. We have to go to Sinister Saturday. But and by the way, happy Valentine's Day, everybody, as we're recording this on Valentine's Day on Friday. But most people watch it on Saturday morning. But the sinister side is that Sam has been out raising money for OpenAI at these lofty valuations. I think the most recent was like 150 billion. But he was then saying, well, they need to convert to a real company and that he needs to be given a large equity share. And so I said, well, how are we going to figure out what that share should be? He says, well, we have to get a fair value opinion. And so what's fair value? And they were trying to do a really low number. Like, so wait, you're out raising money at 150, but you tell me that the fair value is really closer to 50. And so you should get like 20% of the company. So I think there's a little bit of Musk just saying, okay, I'll pay 100. So now you can't steal it for 50. And because the board has to acknowledge that there's a live offer. So
yeah, and that's totally right, Mark.
Yeah.
We sit on these boards all the time, and these are real conversations for the folks that are listening. When we are, investing in startups, we all want a startup to be a 10x, 100x. However, that road looks a little choppy, and the IRR can be a little bit more complicated depending upon the investor motivation. Some people need to redeem earlier. If you're investing in something like OpenAI, you probably have a different investment horizon. But we have seen, especially as a shift from public money going into private and being overweight private, folks are now trying to reverse course and take money out of private to go to public. So there's some motivation there. And boards have to consider, exactly as you said, Mark, a reasonable offer. And who wouldn't say that $100 billion would be reasonable in today's money?
Yeah, well, and especially more than reasonable, again, apologize for background noise, but more than reasonable in a world where companies here in China are giving the product away free, so not $200 a month. So there's probably a revenue challenge for OpenAI coming. And look, every day, it seems like there's another model that gets released that is better than the last, right? First it was DeepSeek, and then Alibaba came out with Quen, right? Or maybe that was Tencent. I can't remember. They all run together. And then there was Quen, and then there was Kimi, and then today ByteDance released another one. And I don't know if you've seen the videos from this new one from ByteDance, but they are almost indistinguishable from like live recording of a human. And someone made a point that, the future of advertising will never be the same, in the sense that now you don't have to hire models. So the modeling business is kind of in trouble, and you can customize your people in the AI generated image or video to you get 10 different versions of skin color and ethnicity, and depending on your target market. And it was pretty stunning, and they're just going to get better and better. There was also a great one. They like 2 years ago, someone did an animation of the statue of David, rocking out and doing a backflip and stuff. And it was pretty grainy. It was pretty jerky, but you could still tell it was David. And backflip was pretty cool. But they showed one that was made last week. Oh my gosh, X. I mean, it was a little freaky. It was like this statue literally came to life, and the background was frozen. That's one of the things, is like if you try to move one aspect of the picture, like the background starts getting fuzzy. But the background was perfect and still. I don't know. It's kind of cool. Can't trust anybody. Like I might not be sitting in Hong Kong, right? This could be an AI of ARC back in Chapel Hill.
If the real Mark is in trouble, just blink twice. Another reminder why we should always check out the YouTube stream to make sure we are okay and real. But it reminds me, Mark, then of another story, kind of going back to the idea of government support on crypto. When we talk about the U.S., we get this question a lot, and it would be kind of curious also, Mark, if you can weigh in about what you've seen overseas with kind of some of the crypto adoption out in China. We contend that has been a little bit of a different seesaw battle, with at first blocking things like mining, but then supporting the first ETFs out in Ethereum, but not having the staking element of Ethereum, which is pretty critical towards a yield strategy. However, what we see in the States has been support for obviously Bitcoin as kind of, front and center, and things like not only a federal but a state level treasury type of investment strategy. Now, I'm sure you saw this, the Trump coin, which we have spoken about and ingest many times. But now we're seeing some of our old pals getting in on the action. Did you see that Mike Novogratz, obviously the CEO of Galaxy, and now Brad Garlinghouse, who is over at Ripple, they lent MoonPay $160 million to handle the overwhelming demand from Trump-themed meme coins, which launched at the inauguration. And so the market cap for Trump coins, they soared to $9 billion within a day. And then that led to sort of this lengthening debates over sort of financial ethics and regulation, and renewed question on, well, do we really need crypto anyway? Right. Which I think is, throwing the baby out with the bathwater. So just kind of curious on, how any perceptions out in China are around the state of crypto today. And of course, I think it's no coincidence that Ripple stepped in with $60 million to kind of favor the favorability of the administration for U.S.-backed blockchain, which may see a lot of favor.
Yeah, we'll come back to the Garlinghouse thing in a second. But look, China, quote unquote, banned, crypto and Bitcoin mining, and which is kind of comical, really, given that like 97-ish% of the Bitcoin mining machines are made by Bitmain and the spin out from Bitmain. I can't remember the name of it. But so that's kind of funny. So clearly there's mining going on here clandestinely. There's plenty of people who own crypto. But I will say it generally, we did, 3 days of meetings plus 2 luncheons. So we probably saw, I don't know, 100 plus people, and vast majority, no exposure, and really weren't even that informed about digital. And
that's a little surprising, I would think, right, Mark?
Yeah. And again, these are financial professionals. These are not
right.
But it was just that. Look, if the government tells you you're not supposed to do it, most people, even myself included, most of the time, would say, yeah. I mean, I'm not going to do everything the government tells me to do, but if they tell me, you're in trouble if you do this, well, except for DeepSeek. I do have DeepSeek on my phone, at the risk, I guess, of being fined all this money.
Does it work better in China? I want to know. Does sometimes some apps work better than native?
You know what?
Give you better results?
I'm going to test it. After I get off, I'm going to test it. But I've been trying each one as they come out. So I got DeepSeek when you could still get it, and I got Quen. I haven't gotten to Kimmy yet, but I do. It is interesting. They're better at different things. The reasoning piece is really cool on DeepSeek. But anyway, the point on knowledge of and kind of belief in crypto, I think depends on kind of who you hung out with, right? Did you hang out with the people early who were excited about it and they told you about it and you learned about it? Or did you just watch the bad stuff on TV like FTX? There were people here who that's kind of what they knew. They knew that FTX was bad and that, Sequoia and a bunch of people lost a bunch of money and, because everybody over here loves Sequoia. I mean, they love Sequoia. So I thought that was interesting. But the few that were knowledgeable and wanted to engage, and they wanted to engage with us on potentially digital assets on the private side. But the average person walking down the street is still walking around with cash, like Hong Kong dollars and Sing dollars. And but that was the same, when we're in the Middle East, that was the same way. I mean, people aren't walking down, trying to pay with Bitcoin. And people say, oh, that means Bitcoin's a failure. I'm like, well, no, people don't walk around and pay with gold either. And gold is money. Gold's on a tear, right? Gold's at 50% in the past year, which...
In fact, Mark, paper money was made for that very specific reason, so that people had not buy using gold and slicing it off and all the fun things that we see.
And not carrying it around, the big heavy gold bar. You take the big heavy gold bar worth a lot, you put it in a vault at the bank, and then they give you this paper. It's actually invented here in China called flying money, because it would fly away in the wind in 1300. And the whole idea of paper currency is exactly it, right? You can carry it around. It's easy. And then we have, our credit cards, and those work too. And that's the power's down. But I think generally speaking, China's stance on crypto is changing. So I think they're going to, reopen some things. There's talk about, making Bitcoin more attractive as an investment here. And I think there's a little FOMO, right? You hear the U.S. government talking about maybe including it now. I think it's 28 or 29 states have bills. And so far, I think actually North Carolina, great state of North Carolina, is in the lead in like getting through the process to actually get passed. None of them gotten passed yet. But North Carolina's went through one house and now it has to go to the Senate or something. Texas is pretty close too. But that's big. And then you've got other nation states saying they're going to buy some. Czech Republic changed the taxation. Japan. Look, Japan just said, all right, fine. We'll lift the restriction on ETFs and we'll cut the tax rate from 55% to 20%, which is a pretty big deal. So I do think...
Point about kind of money circulation and how crypto interplays. It's so interesting to kind of see China's adoption because, in some ways it is such a typical response to sort of have, we can do the actual infrastructure and the hardware of the boxes, but we can't turn on the boxes, at least not here. But we can do it over here. But in some ways that's actually reminiscent of kind of some of the US's approach to crypto early on. And now we're seeing kind of new marks in terms of potentially having this bridge, which we've argued for a long time is stable coins, which we feel actually improves the value of the underlying currency rather than kind of creates a, antagonistic relationship. And let's point to the recent all-time highs that we've seen with USDC. They just hit 56 billion with a B. And again, stable coins create that kind of mechanism as a stable peg to allow for transactions that don't have the same volatility as something like a BTC, and not just USDC, but let's talk about ETH. ETH is always kind of the malign number 2, maybe even number 3 at this point, Mark. They have more than 130 billion stable coins circulating on ETH today. And if this is the kind of native app layer and you have, such a high circulating underlying currency, that to me signals a lot of stability. But at the same time, you have this kind of burgeoning second chain, which we kind of have joked internally, but we still invest in this in full disclosure in Solana. So we've seen them grow, meaning Solana, to kind of really high heights backed by things like meme coins, which have, a little bit of a kind of bad reputation in the market. I tried to argue on last week that, they actually can serve a purpose with things like philanthropy and instant disaster relief, which are good things. But now we're seeing some institutional investors line in, Franklin and Templeton, which I love these guys. I feel like they were a dead man walking for a while in terms of, innovation in the banking space. Totally changed this around over the last couple of years. And they're now looking to expand on-chain U.S. government money funds on where? Solana. And so that's basically bringing 1.6 trillion in assets that could potentially be a game changer here. And so, Mark, as we kind of think about some of these moves, we've got FT, this kind of old school now. We can't call them a DJ. We got to come up with some sort of a naming convention for this kind of born again crypto sayer. But they're choosing Solana, and now it's more than just meme coin. So I think there could be something here.
Look, there's so much development and so much activity and so much innovation and so many good use cases, and stablecoins are a perfect example. Stablecoins can kind of be like the cash, like the currency to the money layer that is Bitcoin. And, some would say that defeats some of the purpose of Bitcoin, is we want Bitcoin to also be that base, that transactional money. Mm-hmm. And I think at full deployment, it can be, but you got to get everybody engaged and using the ledger in order for it to really be the best. Because if a small number of people are using it as transactional and other people still have doubt about it, that doubt is what creates the fluctuation in price. That's what creates the volatility. Mm-hmm. So you need lower volatility, more stability, hence stable coin, right? And I think that will happen over time as there's more adoption. And so stable coins are a nice bridge to that. I could argue that once Bitcoin's fully deployed and fully accepted and everyone's got a wallet, there was a big announcement this week that one of the open source companies, which one was, it'd be better if I remember what it was, but they released an open source Bitcoin wallet to all of their customers. And it was like, it wasn't Telegram, but it was something similar to, no, it was an open source email company. I mean, it'll come to me, but 100 million people suddenly with a wallet, that's interesting. It's kind of like what Facebook tried to do with the Libra project or the DM project, where they were going to give everybody a wallet and they were going to let them trade this coin. And the government's like, whoa, wrong, right? Because then what do I need these money markets for? What do I need these mutual funds for? What do I need these bank accounts for? Well, that's kind of the whole point. But it's still, wow. I will say one thing that everyone here has been talking about the last 2 days, as you'd expect, is AI. Partly the DeepSeek and other model issue, but also there's just a lot of focus here on tech innovation. And again, that's not something you hear in the U.S. Silicon Valley, it's the center of the universe. Well, it is, but there's also some other big supernovas in the world, and some of them right over here in Asia.
Yeah, and I think well said. I think there's such a
Proton Mail. It was Proton Mail.
Proton Mail. That's right. Yeah, Proton Mail, 100 billion. Yeah, we'll just chalk that up to the time difference of being 12. We were just 12 hours behind, so we were able to catch that. We'll kind of come back to it, but the idea is that we've got a lot of perceptions that we are changing as in China, changing perceptions about the U.S. and in markets, and kind of the prevailing sentiment has been, well, can folks outside of the U.S. innovate, or can they just imitate? So that's very much grounded in a old style. I made this analogy last week, mercantile-based approach where, you need labor actually building things, where, reducing costs through labor, increases your margins. It's, Econ 101. But as we know, building tech companies doesn't really work that way. In fact, having more people gives you a greater kind of edge in terms of figuring out how software can be adaptable for given markets. So, we are very exposed, globally, Mark. And actually, we just had a shout out to our LATAM Accelerator program with Outlier Ventures. We have the links of those available. We've put on our social media, but those were very heavy use cases around stablecoins that are helping build markets, right? So they're helping with SMBs, transact in what would otherwise mean, 15% tax into their businesses just due to the way that money is kind of transferred between borders. So not really creating any value, just really an artificial toll taker. More instances where, folks that don't have representation in the banking system because maybe they live someplace outside of a big city, which is the majority of the world, by the way, having something like stablecoins does a couple things. It actually helps the government because you need to create a wallet, which is infrastructure, which you can create a KYC process around to make sure that the right person is getting serviced at that point in time. And so our companies are, really having some pretty big benefits here. They're at the earliest check stages, so it really kind of creates a lot of excitement for us. So we're proud of those guys to kind of have completed their program. And as we kind of round out some of the rest of our points for today, I would be remiss if I didn't kind of highlight that there's some advancement with the world of chips. We highlighted this earlier on with chips supplanting ships, but that development really never stops. And every week, Mark, there's a ton of stories here, and we don't have time to cover them all. So it's this idea that AMD and France, they've now signed a letter of intent on the next gen computing AI technologies. And the reason I kind of thought this was salient is, if you remember last week, France made moves with Saudi about a $20 to $30 billion investment in AI that was going overseas. Saudi, in my opinion, really tapped France because they are a nuclear power. They are aligning with this kind of 2040 vision about we have to increase our non-reliance of or decrease our reliance on fossil fuels. And so now, France, we have some portfolio companies there, but they are really kind of leading the charge in Europe for AI. And now this collaboration with AMD, to me, really kind of speaks to the fact that the U.S. chip market is getting competitive again. And this is exciting because I think we were kind of left for dead because, we were basically attaching our flag to Intel, which hasn't been cutting the mustard, Mark, quite frankly, over the last couple of cycles. They kind of lost some.
No.
That's right.
Yeah.
So now, Mark, I'm curious, so we've leapfrogged AMD, getting some direct relationships with France. France is making big plays in the AI market, despite what might be considered some of the most tight privacy laws next to Germany in the world. So again, this idea of contradictory motives potentially for sovereigns.
Yeah, absolutely. Great example of a company that many people would say, is an also-ran and not really that great a company. And, first they were an also-ran to Intel, and now they're an also-ran to AMD. But the reality is they are still around. So they just keep reinventing themselves, and they keep finding ways to be relevant, and they keep finding new areas to explore. And I think that's massively positive. But when you're not necessarily as strong, what do you have to do? You have to be creative. Like, that's the DeepSeek thing. Why was DeepSeek such a big deal? Well, they couldn't get as many of the super strong chips, so they could only get a certain number. And then they had to use these less strong chips. So the engineers were like, well, why don't we do this, this, and this, and then we can bypass this. And boom, they discovered this really intriguing way to maximize the use. And you could say it was an inferior product, but now it's superior. And then the cool part of this is then Huawei said, well, we have chips that do that. And now the Huawei chips just blew the NVIDIA GPUs out of the water on a benchmark test this past week. But the big chip story, I think it was literally a few hours ago, may not even have made the headlines yet in the U.S., was Trump. And I don't know if someone's paraphrasing him or if he actually said this, but basically saying that Taiwan stole our chip business and we're taking it back. Or maybe he didn't say take it. Maybe he said we want it back. Maybe he said we want it back. I don't think he threatened them exactly, but I think he said we want it back. And of course, then people ran with that and said, oh my God. So Intel is now going to get all this technology and they're going to be the leader in chips. And then China can just take Taiwan back. And I'm like, well, time out, guys. Okay, let's not go down the path of this. So by the way, I got news for you. Here in China, Taiwan is part of China. I know that makes people in Taiwan mad, but that's just the way they think of it. They just don't view it as so. Whenever people in the U.S. say, "Oh, China's going to attack Taiwan," it's like they're like, "Why? It's already ours." So, I mean, I know it's more complex than that, but I think that's a story that's going to develop more in the next few weeks. I don't know how serious that statement was. I don't know if it was actually what he said or if it was paraphrased, but
that kind of is a great segue, Mark, into the chart of the week, because we get this question a lot about, okay, so AI is driving up valuations and investments in both the private and the public sector, but what can it do other than just plagiarize an essay for me and my, teenage son, right? So we found this great chart from McKinsey, which really kind of talks about what are the areas that are kind of predicted to be the most disruptive and kind of project what their overall volume could be in the market by billions. And so there's some pretty kind of, I guess, more obvious categories, but there's some that probably we didn't initially think of. So I'm going to share my screen, Mark, and let me know if this comes through on your end and if it is visible on your end. So for those that are on audio only, we always, as our reminder, this segment, please tune into YouTube, see all the amazing things like if Xavier and Mark are safe or if we are being deep faked, and really the chart of the week and the Bitcoin stock game reveal. So this chart is showing how generative AI will disrupt basically the entire software market. Mark, is what McKinsey is predicting, but it kind of shows some of the shares here. So what are your thoughts on this?
Again, totally agree. And, software kind of at stair steps along with hardware, right? You get a hardware innovation and that increases the computing power, and then the soft catches up, lets you do new things with that new hardware. And then you got data as a service and all these other things that.
No worries. So folks, fear not, Mark is still safe despite the camera going off. We're just trying to preserve a little bit of the bandwidth here. And, Mark, I think you were predictive about this Gen AI chart at the start of the show when you were talking about some of the areas that would undoubtedly get disrupted, like modeling. What's one of the highest areas of disruption, according to McKinsey? Content creation. So, Mark, you nailed that one.
So can you hear me now?
Yeah, we can hear you.
All right. So, yeah, and I have the face for radio, so never going to be a model. So, look, content creation, daily activities task minders and things that we have to do using software are going to move to an agentic world and an AI world, and the software is going to run itself. So I think there is going to be disruption, literally, as you said, across every industry, sector, use case, and it's only going to accelerate as we keep getting this leapfrogging of better technology, hardware-wise, than better software.
Right. And I think the natural reaction here, as we'll probably wrap up on that point, is to say that this is not something to be scared about if you happen to be a very attractive person, or you have to be a person who is very good with art. This is just really kind of demonstrating that what always happens, and we speak about this a lot, Mark, is that over generations and sometimes within generations, we see advancements to what the economy favors in terms of its output. right? So if we're looking at technology being this new medium for things like content creation, well, this just means to me that the pie of content creation is going to grow. And we now have another mechanism to do that. So we don't have to worry that if you are attractive or if you're really good with painting and or sketching, there's going to be a need for creative people, because in the end of the day, computers are trying to think like human beings, and those are two different sides of the brain in terms of the creative side is, and whereas the rote memorization.
Couldn't agree more. And they're just tools, right?
Yeah.
And tools still need that creativity and that innovation and that intuition, and longer conversation for another day, but definitely it'll lead to an explosion of great stuff that we're all going to want to use and consume.
We're so happy, Mark, that despite the technical difficulties and or the distance, Digital Currents crowd will still be treated to a great episode where we talk about, just how the world intersects with technology. And we'll remind our audience, as always, to rate, review, subscribe. Check out the demo day that's on our social media. Great way to kind of bring some of this stuff together in AI and in stable coins. We'll remind our audience, as always, to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.